will be to sort of give you an overview of what has been happening in blockchain from the legal perspective, because what I do is help companies get licensing, get legal help, bank accounts all over the world. So I want you to know what happened, what big events happened lately in crypto regulation, and I want to sort of praise it and criticize it at the same time. So this is, I don't know, some people think you're going up, some people think you're going down, so remember this. These are a few gloomy quotes by the US Treasury, by Germany and France on Libra. You probably heard that Germany and France are trying to block Facebook's Libra from coming into Europe. They said no private entity can claim monetary power. The US Treasury said no compliant fintechs non-compliant fintechs will not survive the war on terror. FINMA, the Swiss regulator, said blockchain-based business models cannot be allowed to circumvent the existing regulatory framework. So these are all quotes that make you feel like we're not there yet, right? Regulators and governments are still very much afraid of blockchain. This is what I get from those quotes. Okay, recent licenses, a deeper look. Okay, Switzerland, 2 banking licenses and security dealer licenses were given lately to 2 companies called Signum and Seba. What these companies do, by the way, this is a statement by FINMA saying that institutions supervised by FINMA are only permitted. Anyway, this is another way to see how afraid the regulators are from money laundering and terrorist financing, and how much they feel like crypto is a dangerous gateway to those actions. And this explains why, for example, these 2 companies that got the banking and securities dealer licenses, they are going to do amazing things, right? It's a digital asset bank. It will function like a normal bank. It will give you the opportunity to have transactional accounts, to keep your digital assets in custody, to get loans of fiat against crypto collaterals. It's amazing. The only thing is that it's not going to be available for most of us. Why? Because it's only restricted for institutional users at this time. And why? Again, because the regulators are not feeling secure enough to open up those crypto services to retail clients because of the money laundering to deal with using those services. Facebook's Libra, everybody has read about it, that they're going to Switzerland, that they chose Switzerland as the jurisdiction of the day. Why, right? Nobody knows exactly why. I can say that the Swiss regulator is much more open to discussion than many other regulators. I do think that the Swiss regulator will get a little bit of cold feet after everything that's been happening in the US with the Senate and US scrutiny about Libra. What Libra wants to do in Switzerland is get a payment system license. What they're going to do is issue a stable coin, and this coin is going to be stabilized by pegging itself to a basket of financial assets in the back. And this has a whole lot of risks that Libra will have to, or Facebook, or the 10 or 15 companies that are going to be backing it, they're going to claim this risk because the users, the end users, cannot be responsible for this risk. So this is a big question of what's going to happen there. Okay, in the US, so a lot of things have been happening in the US lately, a lot of big things. 2 companies got Reg A Plus approved by the SEC. I don't know if you know what it is. It's also called the mini IPO, and it means that you can sell your security to retail clients to a certain cap. In these cases, they both got approved for around $30 million each. So it's a big amount. It satisfies their needs, and they can sell to retail clients, which I think is a big change, because up until now, most security tokens have been selling only to qualified investors or institutional investors. Let's talk a bit about custody, institutional custody services. I think that's a big segment of the market right now, and the big incumbents are certainly focusing on providing institutional-grade custody services because there's a lot of money there and it's in high demand. So Coinbase Custody, they got something that's called the New York Trust License, and it means that they can function as a limited-purpose trust company. It basically means they can be a custodian over other people's assets. The thing is, and this is what's funny here, that they're being held to the same standards as normal banks. So they're not getting a bank license from New York, they're getting the limited purpose trust charter, but the standards are the same as the banking standards. So this makes me think, why not go the Swiss way and just give them the banking license? What is the difference? There's not a lot of difference. I've read the license requirements and the capitalization requirements, and most of the requirements are just the same as what banks need to do. So this is a bit absurd in my eyes. Again, only for institutional clients, too bad. And there's a big thing here that's it's going to allow offline staking and voting, but since most of you are not in blockchain, I'm not going to elaborate on that. Bakkt has been waiting to get their BTC futures approved forever, and they've been sort of in a arms race with other companies that were waiting for the CFTC approval. And finally it happened. And the CFTC approved their physically backed Bitcoin futures because they finally got the New York Trust License as well, which means they're going to have a physical warehouse. In this physical warehouse, they're going to keep in custody the assets, the Bitcoin assets and possibly reserves of cash, and they're going to settle the BTC physically. And that's interesting because this is the first time it's happening. It's going to launch on September 23rd. So I think this is the time to buy Bitcoin, because my bet is that on September 23rd when this launches, Bitcoin is going to jump. The same thing happened in December 2017 when CBOE and CME approved Bitcoin for trading. So Bitcoin reached 19,000 then. Let's see how much Bitcoin reaches now. Again, this is only going to be available for institutional clients. You know the drill. So, Props and Blockstack. These are two companies, the two companies that got their security tokens approved by the SEC. It took them a long time. It took them loads of money, but they did it finally. And now they can sell around $30 million of tokens to retail clients in the US. But these are not the classic security tokens. What is a security? A security, when you think of a security, what comes to mind? A share in a company, dividends, right? Participation units. These are the classic sense of securities. But the tokens of Props and Blockstack are more reward tokens. So, for example, Props gives you reward in tokens for every content that you contribute. It's like if you upload a video, like on YouTube, you get Props tokens. And you can use these tokens to pay for in-app purchases, etc. So both Blockstack and Props are not securities in the classical sense. And you know what? In most Western countries, they would not even be considered securities. So the US securities regulator did a funny thing here. They sort of raised the bar to the point where everything is considered a security. If it's a token, it's a security, even though it doesn't necessarily satisfy the classical pros of being a security. And then they made them go through the regulatory path and got them approved. So again, it's great, but we're not at the point where I can say, wow, that's amazing because this is a classical security token and it got approved. So, Crypto 2020, I think you probably understood it from the tone of my of the things that I've said. I think that a lot is happening in the regulatory scene, but I think that again, institutional investors are still at the focus point. The services that crypto offers right now and the licenses that crypto companies are getting are still not pointed at retail clients. And I think that until that happens, we're not going to see actual momentum in the development of the crypto market in terms of the services and products that it offers, not in terms of the crypto market as a trading market. And some more main problems are that systems for reliably transferring identification data. So in the classical banking world, you have SWIFT, right? You send the bank transfer, and then you have the SWIFT that includes a description about the identity of the sender and everything that's behind it. In blockchain, you don't have it yet, and I think that if somebody develops this in a good enough way that it is adopted throughout the blockchain industry, this will be a total game changer, because then the mere transfer of crypto will bear ID data, which will mean no more big AML concerns. On the other hand, it will impede the anonymity and the whole thing, the reasons that Bitcoin was created for in the first place. So it's a bit of a dilemma. Emergence of secondary markets and other market infrastructure. So right now, I can count on one hand the places where you can trade security tokens. It's almost non-existent, and as long as this doesn't happen, you're going to be able maybe to buy security tokens, but you're not going to have any tradability options. And again, that's a big detriment to the development of the market. Greater focus on price discovery mechanisms, greater services availability for retail clients. Basically, this whole thing can be summarized as, behave like grown-ups, behave like a grown-up market.